All right, traders, this is Blake Morrow with Traders Summit, and today it's kind of a unique show. It's unique in the fact that I've brought Richard Matthews and Michael Brown, who normally like to join me here on the Traders Summit, but then I brought another guy. I brought Ryan Littlestone from Forex Analytix, and I'm going to bring all of these guys in all at once. How you gentlemen doing? Let's start with Mr. Richard Matthews.
I'm good. I'm very well. I presume you want subtitles now for all of us, as none of you will understand our accents. Certainly not Ryan. No, actually, we need subtitles for Ryan.
I'm so excited to get these new Apple AirPods that actually do language translation, and hopefully they'll translate Ryan's thick ass accent. So that's great. Good to see you. Good to see you, Dick. Michael, how are you?
Yeah, I'm doing well, mate. I'm doing well. I spent an hour with Ryan earlier, so that's drained all the social energy I've got for one day. But apart from that,
well, Ryan, we are so happy to have you here as well. We've got a lot obviously happening this week. How's trading been for you, Ryan?
Yeah, it's been all good. I don't know why I'm turning up now. The abuse I've been getting off of these two, it's terrible. But I'm happy to be here. Trading's good. Markets are moving. That's what we want.
Well, we're gonna have a nice lively conversation today because I love having the three of you guys here to talk about. It's central bank week. I mean, one of the bigger central bank weeks that we get of the year. With the Fed, the Bank of Canada, we even have your favorite central bank, Bank of England, Norges Central Bank, and the Bank of Japan. And did I miss any? Was there one?
Norges, SARB,
I said Norges,
South Africa Bank. Yeah, we got them all.
All right, we got them all. Well, so there's a lot happening this week. So I want to start off with Richard and Michael, gentlemen. What do you guys think is, you could say the Fed, obviously I'd say the Fed's most important maybe, but let's save the Fed for the very end. Other than the Fed, which central bank are you really focused on that you think there could be some movement this week?
Personally, the BOE, but not for the reason you'd expect. They're not going to do anything in terms of bank rate, and the vote is going to be very boring. I think what we need to watch, excuse me, around the BOE is their decision on the balance sheet. How quickly do they want to let gilts roll off that balance sheet next year? For the last 3 years, they've let 100 billion quid's worth roll off every year. There's no real consensus as to what they're going to do this time around. And obviously, the long end of the gilt curve has started to get very, very jittery around the fragile fiscal backdrop here in the UK. Fragile might be an understatement, to be honest.
That's not the right word. It begins with F.
Yeah. And one thing I was discussing with Ryan earlier is the potential for these sort of usual and normal relationships where higher yield equals stronger currency. I don't think that really applies in the case of the UK anymore, because what we're dealing with is more an issue of confidence in the stewardship of the economy, as opposed to participants just looking to put cash away. So I think the BOE could do the right thing and end active gilt sales and relieve some of that pressure. Have the BOE ever done the right thing, though?
No, never. I don't think they'll do the right thing. I think they might cut the number down to something like 70.
Yeah, probably around that.
Whether that would be enough to make gilts rally, I'm not sure. Because I think you were just talking before we came online that the political situation is lurching from bad to worse in the UK, and I think that you're starting to get a risk premium maybe in there, a little bit on gilts. Certainly not on sterling, and they'd be coupling. Yeah, a little bit, but I think sterling's strength actually is dollar weakness.
It's all everyone's got faith in Rachel Reeves.
Rachel Reeves, yeah, absolutely.
I think before anyone cleans that up, yeah.
All right. Well, I mean, I should remind people that the 10-year gilt yields are at the same levels they were in October of 2022, right? That's when we had the Liz Truss moment, if you will. So it from a technical perspective, it looks like yields want to break out. I mean, is that what you guys are seeing right now?
Yeah, I think so. I think we both agree that you get this round number, don't they? That people always like to go for a round number, and I think 5 and 6%.
Yeah, on the 10 and 30,
on the 10 and 30 of the targets. I think you'll see it. It just, to me, excuse my language, is an absolute shit show over here.
Right, now tell us what you really
technical.
Yeah, right. but let me just also say that really, I mean, you could say it's affected the sterling quite a bit. I mean, we see the euro sterling's looking a little bit more perky. I know you guys have been typically speaking, you guys have been more sterling bears, but the cable's up where it's at, but that's more of a dollar story, I would suspect. But do you think sterling's going to continue to underperform moving forward?
So I see little reason for it to outperform, to be completely honest with you. We've got an economy that doesn't grow at all. GDP has been, apart from when net exports were skewing the data in H1, GDP has been a rounding error away from zero on a quarterly basis for half a decade, if not more now. We've got a big productivity issue, and we've got a tax burden that is at its highest level in many, many decades, probably
Since I was a lad.
I was going to say since you were in short trousers. And we've also got inflation running at twice the Bank of England's target, and we'd be lucky if that's where it peaks.
And probably higher.
In reality. So I don't really see any reason to be bullish on the UK or bullish on the pound.
Okay, that to me.
Brian's going to tell me I'm being too pessimistic now.
I think the really worrying thing is, being a European, if you look at Europe, the strongest economy is Italy. And that tells you something, doesn't it? I mean, it's just the whole thing is just an absolute basket case.
I think if you're trading,
I
think if you're trading the pound and you're looking at something like cable, for me, it's just creating a bigger cliff that it's going to fall off of later in the year. That's probably the best way to look at it. Dickie said, there's become a divergence. Yeah, we've seen a bit of data, the PMIs. There is a bit of pound support there. Euro sterling stuck in that range, 86, 87. But now's not when the crunch is coming. The crunch is coming, towards the end of the year when we get the probably the disaster of a budget, and that's when the market might go, no, we don't like this, and that's when you'll see a real move in gilts, and maybe the quid getting a bit spooked.
When do you think Starmer will go?
Well, the way things are going, by the end of the week, he's had the Rayner thing, he's had the Mandelson thing. He's just had this other thing going on with his chief, whatever he was, operations
what was
officer.
That story about Diane Abbott? What was the game they were playing?
I don't think we can repeat that here.
No, some of you probably more interested in than us, Dickie. But
I did hear her being interviewed earlier today, and I just feel terribly sorry for the woman. Actually, I don't think she's well. I think it's cruel.
So if Starmer gets the boot, I mean, what's the number of leadership change that you guys have seen in the UK in the last several years? I mean, where are we at? Do you guys have a count?
I'm not even sure where we're at this point, to be honest. I mean, what would that be?
It's a revolving door.
Boris, Truss, Rishi. That would be, if he goes, that would be 5 since 2022.
May as well. You got May in there.
Yeah. It's insane. So but this is the remarkable thing, and we were talking about this earlier. You've got a government with a 160 odd seat majority, which should be able to do basically anything it wants and have free reign for 5 years. They can't pass any laws. They cannot pass any legislation. It's almost completely redundant.
But one of the problems, the bigger majority you've got, the more problems you've got, because you can't keep everyone happy. Everyone is after something.
Not enough to go around.
There's not enough to go around.
Okay. Well, I mean, I hear how silly it sounds, from an outsider looking in. But then again, you look at the dollar, and the dollar is being punished against sterling and against every other currency too. So is it that much worse in the US? And I guess let's just shift gears and say, I'll just go to Ryan. Ryan, how do you feel about the FOMC this week? And the dollar obviously is getting sold, and we've got the euro nearing 118 again. We have obviously sterling above 136. How do you feel about the FOMC? And I'll come back to the two of you guys here in just a few minutes. But I mean, the dollar obviously looks like crap. If you think it looks bad in the UK, what does that say about the dollar?
Yeah, well, we've got our woes. You've got Trump, so we're all pretty much in the same boat on that front. But regarding the FOMC, I think we're probably going to see the last hurrah of any big dollar moves over the FOMC. This will be the market. It's had 2 weeks to assess the data, the inflation, the jobs numbers, the jobs revision, and all that. We get a bit of data before the Fed, but then the market's going to say, right, is the Fed dovish as we expect it to be? Is it less dovish? Is it more dovish? And then we're going to get a final pricing, which might get, we can talk about it here, euro dollar maybe up to that 119, 120 mark. But I think after that, things will settle down. So you may start to see the dollar coming back a bit.
Well, it's been one hell of a move this year for 2025. I mean, already. So you think upside is fairly limited, or downside in the dollar might be fairly limited. So, Michael, Richard, what's you guys' take on the Fed as we come into this week?
I think it's very obvious what the Fed are going to do, which is the 25 basis point cut, and then imply that they will continue to ease, but probably at a relatively gradual and predictable pace. I think it's also going to be very hard, if not impossible, for the Fed to live up to the market's expectations for them, which is to deliver 75 basis points of cuts by the end of the year, and then to get the Fed funds rate back to 3% by June, July next summer. There's only really a world in that happens where the labour market really starts to lose momentum. And at that point, you're looking at a much lower terminal rate anyway. So I think it's going to be an interesting one, because the Fed will try and walk that tightrope of not wanting to rock the boat too much, delivering the cut everyone expects, but then maintaining policy flexibility as much as they can. The issue is, because the market is so dovishly priced in terms of those expectations, even something that says 25 basis point cut, additional reductions are data dependent, Powell basically repeats what he says at Jackson Hole, the market's going to have a big tantrum on the back of that, because it's going to be so hawkish relative to what's priced in the curve.
Sure. Richard, I'm sure you have some opinions here about what I'm about ready to say, but we're seeing this slow takeover. He always has an opinion, right? But we're seeing this like slow and gradual takeover of the Fed, and people would argue it's independence. So what does it look like to you from, somebody who's just been, watching the Fed your entire career and seeing this slow, like move towards a very, 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 dovish Fed overall? How do you feel about what you're seeing from the Trump administration and what's happening with the Fed?
I actually don't think it's quite so unusual as people think, that the new Fed governor is so well signposted by the president. Actually, I think that Trump's picking up a lot of flack for that. He is obviously very keen on getting interest rates a lot lower. I'm not convinced he's right that they should do that. I think the Fed is on an absolute tightrope. Funny enough, I think the last time I was on here that Powell should just buy a whole load of puts and resign. Get the puts on board and then resign the day later and say, see you around, Donny baby. Let's see how it goes.
That would be something. So, I've heard, Ryan, I heard you and your colleague K-Man earlier today talking about one of the big moves that it would be if Cook was removed from the FOMC. Do you think that's going to be a disruptor?
It could be if it comes before the FOMC, because that's going to be another confidence move. If it comes to pass that he has actually got the power to fire Fed heads, it's a whole different ball game. You really undo a lot of the credibility, and we saw how the market reacted when he first started talking about Powell and stuff. So yeah, that would be I think that's going to be a huge move, and I would go so far as to say it would potentially overshadow what the Fed do at the meeting.
All right. Well, Michael,
do dollar though, doesn't he, Trump? As said for donkey's years, the dollar's too high. The dollar's too high. Interest rates are too high. Obviously, with the borrowing, he's got interest rates are always going to be too high. But
sure.
He likes a lower dollar, and he's getting what he wants. Whether in the end it's good, we'll wait and see.
So, Michael, do you feel that the Fed is slowly losing credibility, and where do you stand on this whole situation?
I think for right now, no. I think Jay Powell, whether you agree or disagree with what he's done in terms of monetary policy, I think he's been a brilliant Fed chair. One thing he has done very well is defend the independence of the institution over the last 6 to 9 months, however long Trump has been on this crusade. And actually, to be fair to him, during Trump's first term in office, he did the same thing. I do now worry, though, that that is starting to change. So this evening, the Senate will vote to confirm Steve Moran to a term on the Fed board. Steve Moran has obviously been very close to Trump for a number of years. That's not necessarily the problem. The problem is he's not going to resign as the chair of the Council of Economic Advisors. He's going to do both jobs at the same time. He's going to be sort of on loan to the Fed, which, I mean, that's quite frankly farcical. You're then looking to next year. You've got these efforts to remove Governor Cook, essentially because Trump doesn't like her very much. They've gone digging for anything they can find. You've then got Powell's replacement. Who is that going to be? You would imagine it's someone that puts loyalty to Trump above everything else. You've then got this issue of the regional Fed presidents. If Trump has a majority of his people on the board, this rubber stamping next February of all the regional appointments that no one usually cares about suddenly becomes a bit spicy because Trump's puppets on the Fed board may go, actually, we don't like what you've been doing running the Federal Reserve Bank of Chicago or San Francisco or wherever. We're not going to reappoint you. We're going to veto that appointment. So I think we are right at the top of what could be a very, very slippery slope. And it's an issue, I think, in the US, clearly, but it's also potentially an issue elsewhere because there's not really anything stopping another developed market leader somewhere going, oh, well, if the US have done it, why can't I do the same thing?
That's a great point. Hey, Ryan, when you talk about like the Powell, all right, and Powell's his term's up, next year. Do you think that his term is Fed chair, but not his governorship? Do you think he's going to pack it in and say, you know what, I'm done, and maybe that's when he buys puts, Richard? But that's possibly it. But do you think he's going to stay on even after his role as Fed chair is over?
Well, I think he packs it in. I mean, why would you want to stay? He's gone through all this. He's taken the country through pandemics and everything else. He's got to the end. He keeps getting slagged off by his president. Why would you want to stay? He's got no loyalty to the president, even though that was the president who brought him in. So no, I don't think he stays. And I think he'll maybe seen. If he does stay, then maybe the market won't get as antsy because there's a calm head still at the Fed. But if he does go, then yeah, I think any negativity that's around there just increases. And you talk about what do you do with the dollar and trading over the FOMC. It's all right positioning now for the next few months, but if all these things happen, it's just another bit of uncertainty. So you can't take a view on the dollar now on what the FOMC may do with monetary policy because you've got to worry about what Trump's going to do with the FOMC, let alone policy. So it's all a big, huge mess.
Yeah, it makes sense. Okay. Well, let's go around as we have limited time here. Michael, what do you think is like the best trade setup that you're seeing right now that like either traders can obviously see or maybe something that's going a little under the radar at the moment?
Throw me the difficult question first, Blake. Thanks for that, mate.
You're welcome.
I'll speak for a little while because I'm generous and I want to, give my mates time to think of something themselves while I stall for an idea as well. It's really obvious and it's really consensus, but I'm quite happy being with the consensus right now because I think it works. You've got a risk of inflation expectations becoming unanchored.
You can't say what I'm going to say.
I'm going to say a lot. You've got runaway government spending. You've got Federal Reserve independence being eroded away. You want to be long gold. You probably want to be in Treasury steepeners. And because the policy outlook's getting looser, why the hell would you be anything other than long risk?
I mean, literally, gold as we are sitting here talking has rallied above 36.75, trading at 36.81. I mean, it still has a bit. Now, Richard, you want to be long.
There's anything left.
Anything left,
Oh well,
right.
maybe you want to be long Bitcoin. Is that your trade du jour now? You crypto
I
man.
probably want to be long Bitcoin, but preferably I'll be long gold. I just think the geopolitical risks. I think this incursion into
warmongering.
I'm warmongering again.
Oh,
chucking drones into Poland. I think I'll definitely laugh, but I just think that Putin's having a laugh at Trump. On reflection, I think that he got what he wanted in Alaska, walked away. Okay, he flew a couple of planes at me, but I got everything I wanted. What's happened in Ukraine? zero, absolutely zero. Oh, I fancy a bit of Poland, which is historically Russian. If I was in, I'm going to get my geography wrong, Estonia, Latvia, Lithuania, I think I've got them in the correct order, I'd be very, very nervous. Europe's got sod all armies. They spend all the money on bloody diversity, people in NHS and whatever. I buy gold. I can't see a reason not to, you know.
All right. Well, Ryan, I know you're a currency guy and through. So I know you got some currency play up your sleeve that no one's thinking about. So what's a play you're thinking of right now?
Well, first I'm going to go with these guys, because then if they're wrong, I can blame them on the gold side. Yeah, I'm a dollar seller into the Fed. I think similar to you, you know, if the market doesn't get any big shocks, it gets what it wants, then we're going to see the end of a big bout of dollar selling, and then we could see a bit of recovery. So that's what I'm looking at after the Fed. But happy to stay short going into it.
All right, gosh, am I? I mean, I'm the only guy that's going to get short the SPOOs on FOMC day someday, some point. Am I the only guy out there? No one else wants to join in with me?
Can I mention seasonality, Ryan?
I probably have to see a therapist after FOMC day for sure. Hey, you know, it's so nice to have all of you guys here. It's really good to have Richard. I haven't seen you forever. Ryan, I know I get to see you all the time, but just, you know, always good hanging out with you, and same with you, Michael, as well. Richard, you apparently are with another company. Tell us a little bit about who you're with and how we follow your work.
I'm with my own company, MFCI, with a very old trading buddy of mine, Julian Jessen, who was on the floor many years ago. I employed him when he left school, and he's still friends with me, amazingly. And you can see me on Twitter, which is at Dickie Matthews with a 5 instead of an S, and occasionally on LinkedIn for my pearls of wisdom.
Awesome. I love that. And Michael, what's the best way for us traders to follow your work?
Yeah, either Twitter, Mr. M Brown, also on LinkedIn, or anywhere that Pepperstone logo is, really.
Awesome. And Ryan, I don't think everybody knows about the Flow Show. It's one of my go-to in the morning shows when I get up. As you're already finished broadcasting, tell us a little bit about what you do there.
Yeah, the Flow Show, 10:30 UK time every morning. We just go over the news of the night before and any of the data from the US session. Look ahead at what's coming up in markets, get our trades planned out, look at many pairs and assets. And yeah, that's where you can find me. And come on, watch us there. But if you have any complaints, they go to Blake.
Well, let's not go to me. But you know what? I want to say,
isn't it?
Half 10 start with that.
Best of luck to
yeah.
you three gentlemen. I almost said 4 because I'm counting all 4 of us on the screen. But good luck to the you 3 gentlemen. It's been a long weekend. It's long, and I got up really early this morning. No, best of luck during the FOMC, and to our viewers and listeners. Hey, make sure you give these gentlemen a big thumbs up. Subscribe to the channel so you don't miss these discussions that we have from time to time. And gentlemen, have a great afternoon, and thank you so much for being with the Trader Summit community.
Cheers, Blake.
Cheers, Blake.
Hey traders, Blake
cheers.
Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.